Hello guys, welcome back to my YouTube channel. In today's video I want to teach you something very important, and our today's topic will be on risk management. Guys, risk management. A lot of new beginner traders have issues when it comes to what risk management. I'm going to explain to you risk management so that you understand how to do it like a professional. Now let's go into the chart, guys. This is Bitcoin. Okay, I already have a setup here, but I missed the entry. Let's just look at from the weekly level, guys. Let's look at the weekly level. Remember, our today's topic is what on risk management, but I want to show you something, guys. I want to show you something. It is very important. Now let me remove the whole of this analysis. Let us look at Bitcoin. Or should we analyze Bitcoin? Maybe we can try another coin. Let it not be that I'm only analyzing Bitcoin. If you have any other coin, we can just, okay, let's look at dot. Let's look at dot, guys. DOT USDT dot P. Let's look at dot. Using this is Bybit fade. Okay, all right, this is let's look at what we have here on the 15 minutes time frame. Let's look at what we have here on the 15 minutes time frame, guys. This is dot. Okay. Oh, I already have a setup here, guys. Oh, wow. Wow, guys, can you see what just happened? I already have a setup here on dot. Okay. Wow, this is great. You see how markets respect the zone and play out correctly. You see how it play out correctly. Okay, let me just show you how I analyze this. How about what made me to take this sell trade. Let me clear all the diagram. Let me clear all. All right, so let me show you what made me to take that sell at that point. First of all, let us look at the weekly time frame, guys. I told you something about the weekly time frame. You don't need to play with the higher time frame buyers, guys. It is very important when it comes to what analyzing your chart. The higher time frame context give you a guide. Now this is on the weekly time frame. I see that price created this guy. This is a low. Yeah, we see that price broke structure to the downside. And in that case, price broken structure to the upside. I don't like this guy. Guys, you have to draw your line to be very neat. I don't like to. Now this is it here. Why is this? Okay, now this is it here. We have a break of structure to the downside. Boom. All right, so we have this swing high at this level. So this is on the weekly perspective, guys. So we see that price just broke structure to the downside. We want to know the direction of the market. All right, we want to know the direction of the market, so we know what to be doing if we're actually going to be buying or we need to be what selling. All right, so this is on the daily time frame. I want to adjust this move here. I want to adjust this guy to suit perfectly good. All right, here we are sitting perfectly. So here on the daily time frame, we see that price was making series of lower low. This is a low, lower low. All right, this is a low here, and this low is the first low, which is what simply means a change of character. All right, so we have another break of structure to the downside to confirm that what we are bearish, guys. Watch this very well. Do not make mistake. If you lose this, you have missed it, guys. If you make a mistake here, you have missed it. So you need to relax on the daily time frame. Take your time to draw your trend perfectly. So this is what break of structure to the downside. All right, okay, sharp. All right, so we have continuous break, and then we'll have this last one. This is it. All right, boom. All right, this is it here. So now what is it telling us? This tells us that we are bearish. The market is bearish, so there's no business you going there to look for a buying opportunity, guys. The market is bearish. So what you do is this. Now we want to look for a store where to sell this asset. We want to look for a store. So the store where we'll sell this asset is what we call POIs. POIs are stores. All right, and the store is what? A bearish order block. We want to look for a bearish order block. Let's see if we can find any in the 4-hour to sell this market. Let's see if we can find any, not 4 minutes, 4-hour, please. Let's see if we can find any in the 4-hour to sell this market. All right, okay, so this is it. Good. So here on the 4-hour time frame, what are we having, guys? Good. There is this bearish store here, which is what? A bearish order block, guys. A bearish order block. Say zone. All right, this is where we're looking towards to sell the asset at this level. All right, so this store actually had what? A one-side delivery a price. All right, a one-side delivery. When I mean one side, you see that we have the last green candle, and all what we saw here was what? Red. Market was just what? Bearish throughout. So we expect what? Price to retrace back into this area, and then we take what? A selling opportunity. So this is it. We waited. You have to wait, guys. You don't need to rush the market. You have to wait, and we waited. Maybe it could take days, it could take 4 days, 3 days, depending on the market structure, price action, and all of that. So we waited, and then price came into our zone. Now price has arrived in our zone. What are we looking for? We want to see a confirmation to take what? The sell. So we'll just go to what? 15 minutes time frame. Here on the 15 minutes time frame, let's see if we can spot any confirmation. Remember, our confirmation is simply what? Change of character. You have to understand market structure very well to enable you what? Understand when you already have what? A change of character. So this is market coming in. We have break of structure to the upside. We see the market break structure to the upside here. Boom. All right, market breaks to the upside. We see another break here again. Market break again to the upside. This is a tiny break of structure. You have to be very careful when it comes to what? Outlining what? Your market structure. All right, this is another break of structure. Boom. All right, so we're expecting that price come down to this level, cause another break of structure, but price came down, is unable to take out this high, and instead price will give us what? A shift. That's this become a shift in market structure. That is what? Change of character. This guy here, this is it. This is where we can spot what? Our change of character, guys. Once you see your change of character, enter your trade. Once you see a fair value gap and an order block. So there's a fair value gap here validating what? This order block. So I take my rectangular tool and then I mark out my order block. This is where I want to enter from. Boom. All right, so and then I place what? A limit entry, a sell entry at that level here. I place a sell limit entry at that level, and I targeted what? The withdraw on liquidity, this area. All right, so I targeted this area. This will be, I'll just make this smaller because your stop loss is supposed to be what? Just below what? The zone, below the what? Order block here, just below order block. All right, so let's see, and then boom, I just entered. I saw that price has already played out. It has already played out, guys. So you see a clean what? Analysis. So we just took a sell. Now the question is, how much am I supposed to risk in this single trade? How much am I supposed to risk, guys? When it comes to what? Risk management, I told you risk management. See, this is the secret that nobody will tell you when it comes to what? Risk management. Risk management has to do with what? Sentimental analysis. Risk management has to do with what? Sentimental analysis, guy. When I say sentimental analysis, I'm trying to tell you that it has to do with it. It is optional. It is what? It is something that can be decided by one own self. It is not, you're not taking people advice when it comes to what? Risk management. The question is, how much can I be able to lose and still be fine? How much can I be able to lose and still be fine? For example, I want to take this trade. Now I want to take this trade. I have my capital in my account is $100. How much do I want to risk? Okay, I say, okay, I want to risk $10. If I risk $10 and, for example, this trade goes against me, I lost $10, will I still be okay? Will I still be fine? Is it cool? These are questions you ask yourself, guys. And if you think that, if you ask yourself this question and you see that losing $10 you're okay, that becomes what? Your risk tolerance. That becomes what? Your risk tolerance, guys. Now when you know your risk tolerance, you become consistent with it. Now let me tell you that some persons, like for example, maybe me, I can, if I have $100 on my account, I can say, okay, fine, I'm risking only $10, and if $10 goes against me, I'm fine with it. But another trader we say, no, $10 is too much for me. And if I'm okay to lose $5, please. $5 is fine. That $5 becomes what? The risk tolerance of that trader. It must not be the same. That's why I said risk management is what? Sentimental, guys. It's sentimental. So that amount that is okay for you to lose and you're not going to commit suicide, that's good. That's great. All right. So that is it when it comes to what? Risk tolerance. So when you're able to find out that amount, you become consistent with it. You trade with that amount consistently, guys. You trade with that amount consistently. And when you do that consistently, the first trade you take that amount, second trade that amount, third trade that amount, you do that consistently until your capital, for example, we are talking about $100 account, your capital turns $200. When you make times 2 of your capital, then it is time to say, okay, I think I have to adjust on my risk amount. That is it, guys. That is it, as simple as that. That is what risk management. So guys, if you find this video very interesting and you find it valuable, please do not forget to like, subscribe, and turn on notification bell to stay active whenever I upload new content such as this. Okay, thank you very much for following me to this end. I love you guys. See you in our next episode, guys.